Quick question. Why is your emergency fund sitting at 0.01% interest while inflation is eating your money alive? Yup. I'm talking to anyone with their cash parked in Chase, Bank of America, Wells Fargo, or basically any of the big banks. They'll pay you less than a penny on $100 while the cost of living keeps rising. That's like storing cash under your mattress, except the bank gets to keep the mattress and the interest. If inflation is at 3 to 4% and your savings account is paying 0.01%, that means your money's losing value every single month. That's not just bad, that's financial malpractice, if it's your own money. Luckily, there's a simple, zero-risk way to stop losing money. High-yield savings accounts, or HYSA. And today, I am breaking down the best HYSAs for 2026 that are paying around 4.5% to 5.0%. APYS. Really? Think of HYSAs as your emergency fund hack. These aren't investment accounts. These aren't stocks or crypto. These are fully insured savings accounts that pay real interest, way higher than what the banks pay. Before we go into specific banks, let's set the stage. A high-yield savings account is just like a regular savings account, except you still get your money anytime. It's still FDIC insured up to $250,000. But it pays way higher interest than big banks, because you're not losing value to inflation as fast. Your emergency fund actually keeps up with the cost of living. That's a huge deal for anyone who's strategic with money. Alright, let's talk specifics. I'm going to compare 3 great options that are top choices in 2026. First up, SoFi. Over the last year, they've been paying around 4.6% APY on cash held in their HYSA. That's more than 400 times what a traditional bank pays. SoFi keeps it simple. No monthly fees, no minimums, and you can link it to your check-in for easy deposits and withdrawals. Pro tip: SoFi also offers all kinds of financial products like checking accounts and investment accounts. So, if you like simplicity, it acts like a one-stop shop. Next is Wealthfront. They've been consistently in that 4.5% APY zone for their HYSA. Unlike SoFi, Wealthfront started as an investing platform, but their savings account is now one of the most competitive out there. One big reason people like autopilot cash moves. You can set rules so cash moves automatically between your checking and your HYSA based on your goals. That's perfect. If you're trying to build a bigger emergency fund without thinking about it. Last but definitely not least, Apple Savings. Yep, the same Apple behind the iPhone. Their savings account, which comes through the wallet app, has been offering rates around 4.7% APY. That's top of the market for many months. Here's the cool part. If you use Apple Pay and the Apple Card, you get daily cash back, and that automatically goes into your HYSA. So not only do you earn cash, you earn interest on the cashback too. It's basically like getting paid twice. Now let's talk about the fine print. But the good fine print, all 3 of these accounts are FDIC. That means federally, your money is protected up to $250,000 per depositor, per bank. Even if the company goes under, your cash is safe. People often ask, is this like stocks or crypto? No. This is zero risk. You're not buying anything that can go down in value. The bank just pays you to hold your money there. And another big thing, no monthly fees and no minimum balance requirements. That means you can open an account with $1 and still earn that full HYSA interest. Let's put this into perspective real quick. If you keep $10,000 in a big bank at 0.01%, you earn, wait for it, about $1 a year in interest. $1. But if that same $10,000 earns 4.6%, you get $460 a year. That's $459 more just by switching accounts. That's not theory, that's real money. So who is this for? Emergency funds. Yes, absolutely. Short-term savings goals, like a down payment or vacation. People wanting safe returns on their cash. If you want to open one of the best high-yield savings accounts for 2026, check the links in the description. I've put direct links to each of the accounts I talked about today: SoFi, Wealthfront, and Apple Savings, so you can compare them side by side and pick what fits you best. Remember how we started, with big banks paying you practically nothing while inflation eats away your hard-earned cash. Switching to a high-yield savings account isn't sexy, it's not flashy, but it is smart. It's simple. And it is one of the easiest ways to make your money work harder without taking any risk. Hit like if you learned something new. Comment below which HYSA you're planning to use. And don't forget to subscribe for more honest money tips every week. Thanks for watching. I'll see you in the next video.